Well, good morning, YouTube. Louie here. It is April the 9th, 2022, and I want to talk about silver. All right, I want to talk about the history of silver, the value of silver over the ages, show you a new bar that I made in honor of that, and also some cool James Bond silver bars that I bought. So let's get going. You know, silver, it's been tracked back to the Egyptians, used as coinage in Anatolia. The time of Christ, of course, silver was present, all the way up through the Vikings, Great Britain. Spain created an empire on silver as well. The American colonies adopted it, the Spanish real, as a means of transfer of wealth. India and China thrived on it, and it was in our civilizations around the world and used as money all the way up through the time of John F. Kennedy. And of course, you remember that that was about the time that they had to take silver out of our coinage. Well, silver cannot be disregarded. It has got a history as rich as any you will ever know. And empires rise and fall based on their monetary units. And silver has been at the heart of that over the years. I want to go through some articles here quickly and see if we can connect the dots, see if history is rhyming, look at modern times, and see where exactly we're at from the big picture. Come on along. All right, this article and timeline is courtesy of Gainesville Coins. I've bought from them many times, and they're a great outfit. Just keep in mind when you see their prices, they do add shipping costs to that. So, as we said, 3000 BC back to 5000 BC, silver and copper, often found together, were kind of like peas and carrots, right? And both equally valued in the time. Of course, you can find artifacts going back millennium of the items that were made out of silver. As you know, Athens and Greece valued silver, and much of it was mined from Spain and Persia, I believe. Spain becomes the major supplier of silver to the Roman Empire in 200 BC, and we're just getting started. All right, Spain, after having created an empire based on silver, finds and subjugates the populations in Peru and Bolivia, and finds more silver than they ever imagined. This is the first test of supply and demand that I know of, and this is the first time that silver began to lose its value because there was so much more of it at the time. And over time, that created quite a bit of damage in Spain and around Europe. But going through the colonial period, of course, America adopts the Spanish real as its measure of coinage. They don't make enough American coinage for nearly 50 years. As you know, America is put on the Coinage Act, and silver is valued at 15 to 1. Soon after that, 16 to 1. And it stays that way for years and years and years. Of course, over time, gold became the measure of wealth for the rich, affluent, and royalty. And gold was known as a deflationary asset because it was hard to get, and once people got it, they stored it away. Silver became known as the people's metal because it was more abundant and in lower denominations. And, over time, gold became the preference of the wealthy. All right. But in 1859, the Comstock lode is discovered, and in the West, they needed to expand, and they had silver, and this is when they put pressure on the government. Fast forwarding to the crime of 1873, there was a general adoption of the gold standard in Europe, Nations that were on a bimetallic standard quickly moved to demonetize large silver coins. This effectively put them all on the gold standard. The United States passed the Coinage Act of 1873, which halted production of silver dollars and limited the legal tender amount of silver coins to $5. I've never seen a $5 silver coin from the 1800s, but they must exist. Of course, silver continues to be discovered in the West in America, and the pressure is put on the government to reinstitute a a modest silver purchase program, but they make the mistake of valuing silver at far too high an amount, and it becomes counterindicated for the government to continue to monetize silver while the monetary value is way above the melt value. Why does that happen? Well, because they found so much of it. And once again, we have our second lesson in supply and demand. When you increase the supply of something, you decrease the value of it if the demand does not meet it. And of course, that's happening with fiat dollars as we speak, but I digress. And this is why the country was destined to move away from a silver standard. But I believe that, the cause of that was not that silver was not a valid method. I believe that they misvalued the silver. Had they valued it at 30 to 1 instead of 16 to 1, I think we could still possibly have silver in our coinage today. Now, let's go forward to more modern times because it gets more interesting. All right, and by the way, you'll have to pardon any background noise. I am battling a failing fan motor on my Mac. But the Pittman Act authorizes the melting of 270 million silver dollars. Why? Because they had miscalibrated the value of silver, the monetary value, to the inherent metals value, and it was driving gold out of the country in favor of silver. So basically undoing everything they had done before. That's where all those Morgans went. By the way, that's why you can't look at Morgan mintages and know if the coin is rare or not, because a lot of those were melted. We move up to the big event in 1934. Of course, FDR is trying to get us out of the Depression, and he realizes that he needs to strengthen the dollar. How does he do that? He theoretically confiscates gold and silver. Silver, apparently, you could retain 500 ounces, which by today's standard would make you pretty well off. And of course, I think very few people submitted silver to the government. But we basically make gold and silver to some extent illegal to own. Okay? Now, as soon as Roosevelt confiscates the gold, of course he revalues it. This is the first reset, if you will, and I believe gold went from something like $22 to $34 an ounce. And don't quote me on those numbers, but a significant revaluation of gold. Why? Because gold still backed our money. You just couldn't own it any longer. And for decades, of course, gold went into hibernation. A lot of it went over to Europe, etc., etc. Well, moving forward, okay, let's get into modern times. Of course, the government quickly regretted its disinterest in silver because World War II came and we were in need of all metals, base metals and monetary metals like silver. What did they do? They instated the 1946 Silver Purchase Act, and they were buying silver at a price above the melt price of the silver. This is how the government replenished their stockpiles, and one of the ways that we had that metal for the remainder of World War II. All right, at the conclusion of the war, with so much death and destruction, the rebuilding process created a global silver shortage. The global economy continued its post World War II boom in the 50s. Nations destroyed in the war had recovered, and demand by a rapidly expanding middle class exploded. This was the first year that global silver demand outstripped production by a large margin. Again, here we have the supply and demand equation. The U.S. Treasury began selling silver into the market to keep prices under $1.29 per ounce. Just remember, a short decade ago it was 90 cents. Now it's $1.29 and they can't control it. But yet they try to. They try to suppress it. Above this level, silver dollars would be melted at a profit. The result in the U.S. becoming the world's leading seller of silver by the mid-1960s. All right, many of you will remember your parents and grandparents talking about the mid-60s when there was a great rush to collect silver coins. Of course, in 65, they eliminated silver from most coins. Silver hoarding had become a frenzy as silver prices kept climbing. Prices broke above $1.29 in 1963. This meant that a person could make an instant profit by presenting a silver certificate for redemption in return for the equivalent face value in silver dollars. This led to the Treasury Department to begin redeeming silver certificates with bags of silver grain as opposed to bars. And the bars were beautiful. I have one of those. But the silver grain would just be silver grain. Of course, they're trying to discourage the run on silver. In 1965, the U.S. government removed silver from circulating coinage. Global silver prices continued to rise. The U.S. government had halted silver sales in 61, but continued coin hoarding meant there was a drastic shortage of dimes, quarters, and half dollars. As soon as the mint released new coins, they disappeared. Remind you of nickels? You know, if you're not hoarding nickels as we speak, you should really take a look at that. The mint almost exhausted government silver stockpiles before Congress stepped in. Now, the Coinage Act of 1965 removed all silver from dimes and quarters and cut the purity of the half dollar from 90% to 40%. The last silver dollar had been minted in 1935. In 1968, silver certificates were no longer redeemable for silver. The government removed the silver redemption clause for all outstanding silver certificates in 1968, although they continued to be legal tender. Silver demand grew at an average of 16% annually during this period, while silver production grew at 2%. In 1979, the global silver shortage reaches a peak. Now we're in a shortage again. Demand has grown above supply. OPEC oil embargoes, high inflation, and stagnant economies intensified investor demand for silver. Speculators, notably a cartel formed by the Texas billionaire Hunt brothers, began acquiring silver and silver futures at an alarming rate. And everyone knows the story of the Hunt brothers in the 1980s when silver rocketed to $50 an ounce and then was crushed back to $15.80 the following March, when the margin calls forced the Hunts to liquidate their silver holdings, as well as criminal penalties. Notice how the margin calls go up every time silver starts to push to a new level. That happened recently, a couple years ago, in the silver squeeze when we hit $30. The margin requirements were tightened. But is the hypothecation of silver in the paper market tightened? Okay, are the futures tightened, or are they able to write as many contracts to push the price of silver down as they want? As you can see, the government has a vested interest in suppressing the price of silver. All right, of course there was liquidation and silver prices plummeted. In 1985, the Silver Eagle Bullion Coin Program is introduced. Responding to persistent investor demand for a government-produced silver investment vehicle, Congress authorized the American Eagle Bullion Coin Program. In addition to various sizes of gold eagles, a 1 troy ounce silver eagle began production. The ASE would soon become the world's leading silver bullion coin. After the speculation stopped and they had crushed the price of silver back to $15, in 2008, global financial crisis hit all sectors of the economy. An explosion of safe haven demand saw both silver and gold hit multi-decade highs. Silver prices went to $20.92 in 2008, a level not seen since the climax of the Hunt brothers. Silver ETFs saw record inflows of 93 million ounces for the year. Production of silver coins and bars rose 63% for a new record of 64 million ounces. The physical silver market experienced shortages. These shortages forced the government to ration American silver bullion coins. Demand for silver bars and medallions had silver fabricators working around the clock. Because of this, they were unable to meet the unexpected demand by the U.S. Mint for silver coin blanks. Does that sound familiar? That was 2008, and they've pulled out that old sawhorse again, haven't they? In 2011, the debt crisis in the EU and the U.S. sent silver to record annual highs again. The debt crisis in the U.S. and European Union in 2011 sent shudders through a global economy still traumatized by the global financial crisis. Silver prices jumped after American sovereign debt was downgraded for the first time. 2011 saw the silver price hit a closing price of $48.70, not seen since the Hunt brothers. Despite increased price volatility, 2011 also marked the highest annual silver price in history, and I'd imagine this would be the closing price at the end of the year of $35.12. Physical silver investment demand hit new highs. Silver Eagle supply failed to keep up with demand again in 2011 due to a shortage of coin blanks. This drove the investors to purchase more bars, which saw sales jump 67%. In 2015, the American Silver Eagle hit a sales record of 47 million ounces. Now that the price has been suppressed again, they're able to increase production, and people buy those Silver Eagles and begin to lose money on them because the price is declining from 2015 through 2018 to 2020. Moderating silver prices and the U.S. Mint's ability to reduce production shortages sent American Silver Eagles to successive highs from 2013 to 2015. The all-time Silver Eagle sales record was set in 2015 with 47 million coins sold. Private mint silver products also saw record demand. Total physical silver investment demand hit a record of 292 million troy ounces that year. This demand sent silver supply into a deficit for the third year in a row. But this is where the article ends, and I'm going to shift over and show you some nice silver products. But do you see the trend? Do you see the cycles? When silver goes into short supply, of course, the price spikes. And the U.S. Mint stops producing, contrary to their charter. They stop producing. They use this excuse that we can't find the silver blanks. Of course, the silver blanks are not necessarily available because various issues, but one of them being that they can sell those blanks for a higher amount of money in the private market, and that makes it that reduces the quantity that they're able to sell to the U.S. Mint. All right, I think that's part of the dynamic here. But when sales reach epic highs, that seems to mark the high of a market. Okay, when silver goes into short supply, that seems to mark the low in a market. And I think we're seeing the same thing right now. The government wants to suppress the price of silver. I guess they still think it leads to inflation. And of course, it would in the goods that you use. There are more and more goods used every year that contain silver. Of course, copper is the same, and why silver has not kept up with copper demand, I do not know. We're substantially below the increase in price of copper. But the time will come. It's very cyclical. And whether you're going from 90 cents to $1.20, or $15 to $20, or $20 to $50, they hold this beach ball down as long as they can, and then it explodes higher. Then, once it has exploded higher, they crush it, right? And this is why I think the opportunity for silver is ahead of us, but I also think you should sell when the time is right, because the powers that be do not want to see silver explode out of control and stay high. They want that metal suppressed, and that helps them control inflation. All right, guys, and now the silver I promised you, but first a little nickel interlude. Are you putting together your bags of nickels? Okay, at about a dime a piece. That's an automatic profit. This includes modern nickels. Modern nickel have the same composition of 25% nickel, 75% copper as the older nickels do. So don't squander your nickels. Hoard those. If you knew that every piece of silver you bought for $25 was automatically worth 50, wouldn't you do that? Just because it's a nickel doesn't mean that you should not do that. If you get enough of them, it's real money. They're selling on eBay for a substantial premium. You don't have to melt them. Hoard your nickels. Stick an eye in the Nazis, over at the U.S. Mint, and make sure that Gresham's Law takes nickels out of circulation. All right, I was feeling inspired by the story I'm telling you. Of course, I'm a big fan of the history of silver, both demonetization and remonetization. I created this 10-ounce bar. It says, "We stand with silver," and a couple little arrows piercing the bullseye. I think silver is the bullseye, and I think silver is the people's metal. Of course, our founders said it was 15 to 1 with gold. Now we're up pushing 80. This came in a little under 10 ounces at 9.92. Anyway, I only made one of these. I probably won't make another. If anybody would like it, I'll trade that for 13 ounces of 999 silver. Just let me know. All right, guys, that's my bar, and this harkens back to the William Jennings Bryan Silverite movement when he tried to reinstate the people's money, silver, and was beaten down handily by the millionaires of the day and the government. All right, what I want to show you now is those beautiful James Bond bars. All right, here's my invoice. These were purchased from Monument Metals a couple of weeks ago. And James Bond, Diamonds Are Forever. These were $307.70 for 10 ounces. Outstanding deal for what I would call premium collectible silver, with actually very little premium above generic buffaloes. And here they are. Let's get you a good look. I have 1, 2, 3, 4, 5. Here's the fifth one. And there is the familiar 007. Ooh, I love the diamond background. These are going to be hot, guys. There's a limited mintage on these, and there is quite a few. But look at that. Look at the way that diamond shines. Of course, it's in plastic, and I will leave them in plastic. This is an investment for resale, and then any profits will go back into bullion or shot. But look at that Diamonds Are Forever bar, the 10-ounce version. The 1 ounce will do well. Also, I have 1 ounce coming from another supplier who is not shipping as quickly as Monument did. But just a gorgeous bar. You can still buy these, go out and get some if the premiums aren't too high. If you like this kind of thing, I mean, I would certainly buy. Well, this is $30 an ounce over an Eagle. That's $40. You can get 30% more of this than you can silver eagles. And the premium on this will increase over time. So you probably be able to double the amount of silver you can buy ultimately if you flip something like that. And the first bar was a tremendous success. All right, that's it for this video. I hope you'll tell me what you think of the history of silver. I went through it rather rapidly. The takeaways that you gather from how the world and our government manipulates the price of silver up and down when they need to, and whether you think that beach ball is about ready to blow out of the water. I personally do. If silver can go from 90 cents to $25, it can go from $25 to $600. I didn't know if I did that math, but you just got to give it its time. You notice it didn't go from, 90 cents, down to 10 cents, and it didn't go from $15 down to $5, and it didn't go from $20 down to $2, and it's not going to go from $25 down to $10. Someday we'll be saying, I remember when silver was $50, and well worth it. Well worth it. Silver is exhausted when it's used in manufacturing. Recovery is not very good for silver. Gold is retained, all right, but silver is exhausted. So all the silver that came from Peru, all the silver that came from Comstock, all the silver when we've had those explosions in the supply of silver, they've been used. There are artifacts and there are coins, but those are in the numismatic market or in the fine collectibles market. All right. So because silver is collected and valued as a numismatic, and industrially it is generally disposed of, not recovered. Today is what matters: supply versus demand. It's coming. It's coming. Okay, guys, let me know what you think. Have a great weekend.